Ladies and gentlemen, now it's our great honor to welcome on the stage one representative from Hashkey Exchange. Hashkey Exchange is setting standards for legitimate exchange models in Asia. And now it's our great honor to introduce to you the presence and the presentation of the Head of Global Expansion, Managing Director of Hashkey Exchange. Let's welcome Mr. Ben Elbaz.
Excellent. Well, it's an honor to be here in Hanoi in such a great venue. First time I've been in the National Convention Center. It's quite a beautiful stage to have a presentation. And it's quite nice to see, on day 2 in the afternoon, there's still so many people in the audience. So it's great to see, the high level of interest in everything that's going on in the industry. The topic that I'm sharing today is actually, something that myself and Hashkey have been thinking about and working on and building for the last 7 years, starting in Hong Kong. Really, which is the idea that in order to actually build and deliver mainstream adoption for Web3 and for blockchain, is we need to allow users and institutions and corporations to be able to trade and keep their assets in licensed, regulated types of companies. So today I'll be sharing a little bit more about this topic, and specifically why, from our point of view, we think that things like regulation and licensed exchanges are actually very, very phenomenally good for the industry in order to help us accelerate to the next stage of this industry's growth. So myself, I'll move on in a moment here, but myself, I'm Ben Elbaz, Managing Director of Hashkey, where I've been from day one at the company's formation. Prior to that, I was the founder of one of Stanford University's largest blockchain communities back in 2017, 2018. And Hashkey Group now is Asia's largest regulated, licensed digital asset financial services group, including exchange, asset management, and also cloud technology and staking. So this is something interesting that we talk about so much, which is, to a wide variety of the market, when people think and hear about regulation or licenses, kind of the first gut reaction is it's going to be challenging. There's a little bit of fear against regulation. Or am I not going to be able to do what I want to do on a regulated exchange or a licensed exchange? And I think our view on it, and just a view from experience, when you actually get into the details of what regulation and what a license actually is for an exchange, it's actually very simple. It's really just a set of rules that are designed to help protect investors and protect users. So it's really just a set of rules. Regulation is really just a set of rules to help protect users and investors. And I think probably a lot of us in this room, in blockchain and Web3, the idea of trust is crucial. And what a lot of us talk about many times is the idea of trustlessness. Is one of the reasons people prefer decentralization versus centralization is the idea of trustlessness. Well, if I use a smart contract or if I use blockchain, if it's completely decentralized, then I don't have to trust a centralized entity. And that's one of the arguments that people use to prefer decentralized activities versus centralized entities. And if you think about it, right, this is something interesting we thought about is if you think about DeFi, right? And DeFi is great. A big proponent of decentralized finance and smart contracts, huge proponent. And at the end of the day, if you actually look into the details, what is a DEX? A DEX is basically a series of smart contracts, and these smart contracts have written rules for how users should be engaging with them, how assets should be held, and how transactions should be processed. So whether it's a decentralized exchange or whether it's a centralized exchange, at the foundation, the foundation layer is a set of rules. So the reason I'm making that point is for any of the users or traders or investors in this room or who are watching this video later, when you're thinking about centralized exchanges and who you should trust and where you should put your money and where you should trade, it's very, very important to understand that the set of rules that a regulated, centralized, licensed exchange plays by is much different than the set of rules that unregulated companies might play by, and that does have a huge difference on the safety of users. So our view is that once you have regulation and once you have these rules and once you have licensed exchanges, it actually creates an environment where more users, more institutions, more banks, more corporates are willing to come in. And I would think that probably one common goal amongst all of us in this room and everyone in this industry, one common goal that we all share is that all of us are really rooting for this industry to reach mainstream adoption. And one of the ideas that Hashkey was founded on was we were founded on the idea that in order for this industry to reach the true promise of the technology, right? In order for blockchain technology to reach its true promise, is we're going to need to be able to reduce these barriers to mass adoption. And in our view, we have focused on building regulated, licensed companies to help bring more people into the Web3 economy and accelerate adoption through that. So this is really I think the key thing that I'm trying to argue for and convince in this presentation is about how regulation and licenses are really a key catalyst to adoption. So this number, $20 billion, is crazy when you think about it. Over the last 4 years, right? In just 4 years, $20 billion have been lost by centralized companies, unregulated centralized companies, through either hacks or fraudulent activity. So this is data that we collected, right? Like $20 billion. If you were just watching the last panel on stablecoins, right? Our friend from Tether noted that I think it was in the last 2 years, their total profits were about $20 billion, right? So $20 billion, just think about that, worldwide. I mean, these are normal, everyday people. These are, traders, these are companies, but you have all these people worldwide who have, initially they wanted to buy into crypto, they wanted to buy into Web3 because they believed in a project, or they wanted to have a better life, and because they were trading on or working with unregulated, centralized platforms and companies, their lives were changed. And I think one of the things when we think a lot about how do we accelerate mass adoption is we want to avoid the churn, right? We want to avoid the user churn and the disappointment that a lot of users face when they get into this industry. We want to avoid those risks and avoid that churn by helping to build companies and build exchanges that attract users into more licensed, regulated exchanges that have much less risk of losing customers' money in this way. So I mean, this is just one number that I wanted to stick with you, that I wanted to stick with you. It's an unfortunate number, right? But $20 billion is just insane to think about. So this is something that we think about in terms of the trust gap that still exists in this market today, unfortunately. So if we think about regulation, licensing, it's an easy word, but what does it actually mean? What is its value proposition, right? What is its USP? And I was having a conversation earlier today with a friend of mine who's very focused on DeFi, very focused on trustlessness, very focused on everything that's decentralized, and we have a lot of points that we agree on. And one interesting item that I was bringing up is, I'm not sure if any of you in the audience, when meme coins became popular, a year and a half ago, like any meme coin traders in the audience? A few? I see one. I saw that guy over there. So if you remember back in the early days of meme coin trade, this is just an example that I'll show you. Is a good way to understand why like regulated licensed exchanges are also good and safer. If you remember back when meme coins just became popular, everyone was using an app called Dex Scanner to search for meme coins, search for the new hottest ones. And if you remember back in the day, there was a tool inside Dex Screener that you could go into. I think it was Go Plus that was the vendor for that tool. But you could go in and you could see that you could get like a security rating on the smart contract that was used to deploy that meme coin, right? And sometimes there was like 40 different checks or 60 different checks, and based on whether or not each of those tests were passed, you got a security rating for that smart contract. So what's actually happening there, right? Is basically safe smart contracts in the DeFi world should be following a set of rules that protect the users of those smart contracts. Likewise, with centralized exchanges, licensed exchanges, all that's different is that they're following a set of rules that make a much safer, trading environment, a much safer custody environment for users. So one thing I would encourage you to think about is the same mentality that you use to assess whether or not a smart contract is safe to deal with. You should also be taking the same mentality when you're assessing whether or not a centralized trading platform is also safe to deal with. So in terms of some of the things that, if you look on the left side of this graph here, or of this slide here, some of the things that make a huge difference to user protection when you're a regulated, licensed exchange is really, first point is oversight. So licensed, regulated exchanges generally have a number of third-party witnesses, right, or third-party overseers to check whether or not the company is actually doing what it should be doing or doing what it says it will do, right? So sometimes these are financial auditors, sometimes these are internal auditors, and then obviously most times it's the regulator. And it's impossible to be 100% perfect, right? No company is going to be perfect. But when you have additional eyes from the regulator or from third-party auditors, definitely from a user's perspective, you have a little bit more sense of comfort or security that the company's going to be playing by the rules a little bit more. So oversight, having third-party oversight is very, very important to help giving users a little bit more comfort that this is a company or this is a platform that is actually trying to play by the rules. The other very, very key thing for regulated licensed exchanges, and I think this is even more important, I think this is really important to remember after what happened to FTX and then what happened earlier this year in terms of some large hacks is any regulated licensed exchange, when a user deposits their assets with that exchange, there's very specific legal protections that prevent the exchange from using your money. And that it might seem a little bit, not that straightforward, but it is very important to understand when you deposit your assets into an exchange, whether or not an exchange can just take those assets and do whatever they want with them. For a regulated licensed exchange, that's never the case. The second thing is for in certain jurisdictions, like Hong Kong, for example, there is a requirement that for a specific type of secure hardware to be used for the protection of customer assets and like completely offline and never touching the internet. So in terms of being able to prevent hacks, having these types of strict requirements, these strict rules on exchanges to hold clients' assets in offline storage that's in very secure hardware is an incredibly different, an important protection and safeguard for users. So when you talk about what that enables, when you have regulation that's clear as what's coming out here in Vietnam, more legal clarity around what you can do and what you can't do on these platforms helps accelerate capital investment from funds, from banks, from allocators. And I think what's even better and more exciting is as regulations become clear and as platforms are actually able to be officially licensed, what you get is more connectivity between these licensed platforms and the traditional financial system. So, traditional financial system, obviously, payments, custody, and banking systems, but that makes a huge difference when, if you're a large corporate or you're a large bank and you want to be using stablecoins, for example, in the last presentation, you want to be using stablecoins for cross-border payments. Being able to have confidence and security that you can go from stablecoins back into fiat currencies through stable bank rails is incredibly important. And these are the types of things that unlock further adoption in the economy, is when more and more larger players, more and more diverse players are able to have a little bit more peace of mind when it comes to coming into the crypto markets, because they know they can go back into the traditional financial markets in a seamless, reliable way through licensed platforms. So just some of the rules, I went through this a little bit, but just some of the rules that matter for what we've seen from retail investors and from institutional investors is, what we've seen from users in terms of why there is a growing preference for regulated platforms is what I just said around custody, safety, transparency in terms of the assets, where they're held, who they're being held by, who can actually have access to those assets. That transparency creates a lot more security for users. Knowing you have the right to withdraw to your assets, you have that legal right to withdraw of your assets, I think is something that's very, very important to individual users. From institutional investors, where we at Hashkey have seen a huge amount of flow in the last few months, knowing that the licensed platform that you're working with has a number of legal risk controls in place as a regulatory compliant company, and also abides by AML and KYC rules, and also has audited financial. These are the types of conditions that allow larger companies who are sitting on the fence for many years to actually go to their board of directors, go to senior management, and say, hey, I think that we should really get into Web3. I think that we should get into stablecoins. And hey, by the way, there's a licensed platform that we can work with to help us out on this. That really helps enable and accelerate the adoption and involvement in larger and more diverse companies coming into this space. I mean, we've seen it firsthand in Hong Kong. I mean, Hong Kong now has probably one of the biggest number of securities brokers, like licensed securities brokers, who are offering crypto asset trading through their mobile apps. And a lot of that volume and a lot of that capability is coming from them routing the orders into Hashkey's trading infrastructure. So the fact that in the Hong Kong market there's this large licensed trading platform that that Hashkey has, it gives the government and gives regulators more confidence to allow the brokers to route orders in there, and then allows even more users from the securities brokers to be able to get access to crypto assets, right? So that's another example of adoption. So this is another, so again, if you go back to what was the purpose of this talk, and really the big focus was on the bridge. How do we bridge the crypto economy into the real world economy? And how do we accelerate adoption? Because a lot of us working in this room and a lot of us who are in this space, it's very easy to fall into our own bubble. And I think one of the challenges that the industry has faced to date is there's so much great technological experimentation, a lot of good applications, but a lot of us are still kind of building in a bubble. And it's not our fault. I think what's been the challenge historically is a lack of regulatory clarity, a lack of licensed players, which kind of made a lot of the tokenized assets, exchanges, custodians, and stablecoins a little bit kind of isolated from traditional finance or the real world economy. But what you're seeing is that as regulatory clarity becomes more and more clear in a number of different jurisdictions, Vietnam included, licensed players finally offer the opportunity to bridge everything great that's happening in the crypto economy to the real world economy. And a lot of that goes through the traditional financial rails, through banks, through payments providers, cross-border commerce, e-commerce players, ETFs. So the existence of these licensed players really helps to build bridges between all the great things that are happening in crypto and bring it to the real world economy, expanding and accelerating out. This is just a quick list of, I've said many times today about all the different regulatory clarity that's coming out. I don't have time to go through everything one by one, but you can see there's this is an example across many different continents, Asia, the Middle East, Europe, North America, South America. And you can see right now, the undisputed trend is growing and growing regulatory clarity. So we all have to be building products and thinking about the future based on that. And just a few, because I'm a little bit short on time here, but just a few notes on Hashkey. I think the biggest important thing to note about a company like ours is that it's very rare in this industry that there's been a company that was built day one to operate under regulation. But Hashkey's been doing that since 2018 in Hong Kong, where we were founded. We were one of the first companies to get the license in Hong Kong to operate a regulated licensed exchange. And then every market that we have entered, or every market that we have partnered in, we've always focused on working with regulators and being licensed, working with local partners first, and then coming to market. And I think one of the good things that accelerates our involvement in each market is, as each market or each country begins to have regulatory clarity, we prefer to invest in more heavily. So Hashkey is probably one of the only companies worldwide that has not gone out and tried to operate without regulation and then go and find a license. But from day one, the entire company, its corporate culture, its operations, its risk control, its risk management, everything that the company does has been built day one to operate under regulation and under a license framework. So just a few last notes before ending here. I think some of the exciting things that Vietnam can gain in this era would be across six different areas. User protection, incredibly important. Increasing capital flows coming into licensed players, and then also being able to accelerate many more use cases that are able to thrive under a licensed framework. And with that, I'll end on this slide and just note that as the market here in Vietnam and as the market globally goes from less regulated to more regulated, there's a lot of different roles that people can still play, and there's a lot of different things and advice for builders, policymakers, and investors to keep in mind. I think the one thing I'll note on this before ending is, from a builder's perspective, probably one of the most successful things that we've seen in the last few years is the builders that have chosen to build on compliant rails or work with compliant and regulated companies have been some of the builders that are incredibly successful. There's a lot of things that we've seen in Hong Kong around companies and apps and builders who have been building on our infrastructure. And I think that's one thing that is really exciting going forward, is being able to build on licensed platforms helps expand overall user base and get a little bit closer to mass adoption. So with that, I will end, and it's been a pleasure to share what we've been thinking about for the last 7 years for everyone here. And feel free to keep in touch if anything here is interesting to you. Thank you.
Thank you so much, Mr. Ben Elbaz, for that practical sharing.